Welcome back. You're watching Citizen Business Center, and I've got with me Mbitha Mwema from African Alliance, George Bodo from EcoBank, and Kimani Ichung'wah, the Member of Parliament from Kikuyu. Thank you all so much for joining us. Quite an interesting day to be a Kenyan after President Uhuru Kenyatta assented to signing the bill. And just last week, you were here in studio, and you said we are going to make sure that he does. So, how's today been for you?
Well, maybe just, it's been a great day, and it's a great day for, not for me, but for this country. And I think we didn't say we will make sure, we just said we will urge the President to sign this bill in the interest of all Kenyans. And I must take this opportunity to thank the President for being a great Kenyan. He has proven to the Kenyan people today that he stands and represents those, the majority poor people who are suffering, and George and the rest.
And of course, the very same poor people might be the ones who are most affected by this bill. But we'll get into that in just a moment. George, and there's already so many comments on Twitter saying, why did you bring that guy to speak? He's so negative.
We have to be I have to be negative, because from the onset, I didn't think that we need an interest rate cap. From whichever angle you look at it, I don't think that this country is, it's a way to go in terms of bringing down cost of credit in the country.
All right, and we'll talk about that, in just a moment, especially the point that members of Parliament pushed and said banks have had forever to be sensitive to this issue, and they haven't. Mbitha, and I spoke to you earlier, and you did speak about the other side, which is the positive side of the capping of the bill, despite the fact that you're an analyst, and you would usually say no to capping of interest rates. Tell us your thoughts on this.
First, thank you for having me here. I think I'd like to look at it from an investor perspective, because we have the large banks listed on the Nairobi Securities Exchange, and we wanted to just analyze and get a sense of what the impact of this would be. I think if you look at the bill which was signed into law, it's actually progressive, it's not retrogressive. So I think what will happen is we'll start seeing a capping on the interest rates for future banking business as opposed to retrogressive business. Now, if you actually try and get a sense of what portion of the new business that would be in terms of the entire business, I don't think it's going to be material, because at this point in time maybe people will cut back on lending and switch their asset allocation to government securities. So you probably get anything between 10 to 20% in terms of new business is actually within the capping band that's just been discussed.
And of course, Ichung'wah, they say what is popular is not necessarily always right. And I just want you to paint that picture for us, because a lot of the analysts we're speaking to today say what Uhuru did today was a political move more than an economical or economics.
I think this is one of the bills when you realize, Torian, the President did not just assent to it and leave it like that. He did issue a statement, and if you carefully read that statement, he's given a chronology of events from the very first bill that was passed by Parliament in attempting to cap interest rates to where we are today. And he also appreciates, as President, that indeed the banking sector in this country has not been fair to the Kenyan people. And he goes further towards the end of his statement to say that he appreciates, and the government does appreciate, the values of free market economy. But I think what she has said is true, that, and Kwame said it here last week, that the heavens will not come down because this bill has been assented to, and they're not about to come down. And I think it is just a question of looking at what is in the best interest of our economy and more so the people that we represent. The bill could be popular, yes, and is a very popular bill with the public. But I did say a few weeks ago when our colleagues, George and his friends in the banking fraternity attempted to hoodwink the Kenyan people with what they called an MOU, and they said derogatively that all you are doing is to push through a very populist bill. And I said, if the bill is populist, then they must also understand that the interest rate regime in this country is extremely unpopular. Unpopular with the public, and also unpopular in terms of being able to help our economy to grow. And I think it's good to mention, because she just mentioned it, that this bill is not retrogressive. Therefore, it's not going to hurt their business as much as they may want the world to believe. Two, I've seen a lot of questions asking when does it become operational. And I think it's only fair to let Kenyans know the bill did not have an effective operational date. Therefore, we revert to the constitutional provisions. I think is Article 116 of the Constitution, which gives it about 21 days. We have 7 days for the government to publish the bill. Then 14 days after that, the bill becomes operational. Therefore, I'd encourage those who are about to uptake loans to wait for another 21 days and enjoy the lower interest rates. But it's not necessarily that the bill is populist, more than what the bill portends to do for our economy. And I said it here last week, and that for any economy in a developing country like this one to move to the next level, we must empower the SME sector in our economy. And we cannot do that if the large banks in this country are making tens of billions in 6 months. It's only yesterday one of them announced, I think, a 10.5 billion shillings profit in 6 months, not in a year.
All right. Okay. What is your response to that, especially the comment about hoodwinking and the MOU? What happens to the MOU now, do you think?
I think before I get to that, I need to explain that. As I said before the session, that for me, capping of lending rates is not the best way. I agree that lending rates in this country is very high. It's extremely high. But capping it is not the best solution. And this is why I say, though, I got 4 reasons. Number one is, if you cap lending rates the way they've done, it creates a pricing inefficiency in the market, to the extent that, as we are today, you are supposed to be scored on a risk basis by a bank. So if the bank thinks that you are too risky, they will price you high. If the bank thinks that they're comfortable with you, your risk level, they'll score you low. Now,
but that does, let's be honest though, that doesn't really happen.
Happens. It's a second stage. I mean, over the last 2 years, even to last year, if you look at the statistics of the amount of CRB reports pulled by the banks, this was quite huge. So it means this thing is taking place. It's just that we needed to take traction. I think it just started taking root about 2 years ago. And number two is, apart from the risk pricing, so what I'm saying that now if the bank thinks, in the previous regime, if the bank thinks you're too risky, they'll price you high. Now if they think you're too risky, they'll not give you the loan. Absolutely.
Yes, and that will of course affect the SMEs.
Yes.
Who
And number two is, we've got the central bank, whose core mandate is to maintain price stability. Now, one of the ways central bank, it does a number of things. It maintains price stability with a number of things. One of the ways they do is, they do what we call control the price of money via policy rate signaling. So when they think that the price stability, there's no threat to price stability, they probably will signal a lower interest rate regime. But in the case where you have fixed the price of money, then it effectively undermines the efficacy of the monetary policy, which is why the central bank has been against this. And the problem with, the reason why price stability is very important is because of the consumption taxes. Now, when prices are very unstable, consumer prices are very unstable, then you got the consumption tax like VAT. People are not spending. Yeah. So it has a direct bearing on the fiscal position of the country. Yeah.
Let's just move on to Mbile for a minute. And you did mention about the impact to asset prices, which you said, this could be the beginning of correcting of asset prices such as land, for instance. Maybe you can just tell us a little bit about that, which also, of course, looks at the flip side of the capping of interest rates.
Just before I answer that, if you'd allow me, I just want to touch on the macro. In as much as we're saying the cost of lending is coming down, and therefore estimate that there will be demand to actually take that up, it's one thing to have demand, it's another thing to actually have the banks willing to supply it at that particular price. So in as much as we see it as positive, I think in the short to medium term, there could probably be a stall in terms of the extension of credit to the private households, which does not end up being necessarily beneficial for us in the short term. Another macroeconomic thing to consider, I guess as I sit here representing the capital markets, I mean, today we were doing many calls after the assent of the bill into law, and we talked to many investors globally, and everybody's concerned about the outlook of the banks, the interference from a government perspective, and that brings a bearish stance. What does that mean? That you probably have a lot of European, US kind of investors selling out of Kenyan banks because they're not very comfortable with this uncertainty in the market. What does that mean? There's a trickle-down effect in terms of the cost of money, in terms of the foreign exchange rate, and it doesn't probably look very positive on a macro whole-scale perspective at this point in time. However, when you come to asset prices, I think you're absolutely right. I mean, there will be a correction in asset prices across many categories. I think I'll start with equities. Because of what's happening, everybody will try and crystallize the impact on banks. Everybody thought it was going to be material. I don't think it's material. We've done a bit of analysis in the office just before I came here, and we reckon that at least for the top 5 banks, there'll probably be a 2% decline on earnings for this particular year, and maybe 5 to 7% decline for the earnings next year. And again, this is because the new business is what's been affected by this current bill, not the existing business. So there will be a downward correction on asset prices on the stock exchange. For real estate, same case, because if I wanted to buy a house, I could easily walk into any bank and apply for an unsecured loan and get it. But now I'll have to probably meet a higher hurdle rate to be able to convince the loan officer that I can take that money. It will mean maybe I'll get it in a week, maybe in 2 weeks, maybe I may not even get it, or even though I'm getting it, I'll probably get it at an additional fees. If I was paying 5% to borrow it earlier, the banks could easily maybe move it to 10% to 20% because that's not necessarily addressed in the current bill. So that's a good positive thing in terms of the next couple of months. Maybe we will see a correction in asset prices coming to a normalized level, and once we come to a normalized level and the long-term outlook for Kenya is positive, then you actually want to come back and start accumulating assets very gradually as we go into the elections and beyond.
All right, let's talk about impact to banks just a little bit more. And one of the news reports showed the MP talking about downsizing, which you did mention also in the first. What can we expect from banks?
As I said earlier, I think banks will have to spend some time adjusting this whole thing. They'll go back to strategy boards. Depending on, I would expect that the mass market focused banks, the equities, the KCBs, they'll have to have an urgent meeting, probably tomorrow or Monday. Yeah, this is very urgent matter. We shouldn't expect banks to come out to issue some adjustments. But I think most of the adjustments will be very internal with them because they have to comply on this. And I mentioned some of the 4 adjustments. I highlighted a bit of them. Number 1 is the cut down on staff. Number 2 is that the adjustment of the funding profile to fit the new realm that banks can no longer reprice their assets as they want, as they used to do. It's been curtailed. Number 3 is banks have to elevate customer excellence. I think one of the things that the president said is the public has been frustrated. I think banks also, it's a challenge of banks. They have to treat the public right now. I think if banks were treating the public right, they would have defended banks. They would have told the president not to sign the bill. But the banks also, the public, the relationship between the banks and the public has been too predatory in my view.
I think what George is saying is very true, and I'm glad he appreciates that the banks have not been very kind to the Kenyan public. Most of those in business, they've been very unkind. 2, I said, they've been very insincere with the public. And you remember when they came up with the issue of the MOU, it was after this bill passed through the House. And the MOU, the only intent of that MOU was to try and persuade the public against persuading the president to assent to the bill, and probably dissuade the president from assenting to the bill. But that being watered under the bridge, I think I also appreciate the fact that he also appreciates that there are certain inefficiencies within the banking sector that they need to correct within the banking sector. And I want to say one of the things that they had mentioned is the question of not being able to advance credit to what they would portend to be more risky clients within the banking sector. Also the threat to realign their staffing levels. And I use the word threat because that, again, he appreciates that it would also be a pointer to the inefficiencies within the banking system. That it would be a pointer that if you're telling us you would have to realign your staff and rationalize your staff, that the bulk of your revenues are coming from interest income. And therein lies the problem, that you cannot, all of you as an industry, be relying solely on interest income. You have got to be more creative now. You have got to treat your customers better. You must now compete on customer service. Let me walk to your bank tomorrow and find better customer service than Bank B and stick to you. And therefore, I'll be able to bring even more of my deposits to you, unlike going to the other bank. And I think you bankers have been left in a world where you rule the world. And what you said earlier, that regulation is not the best thing. As a student of economics, I did admit here that indeed it is not the best thing to regulate. But in an imperfect economy, there must be some level of government regulation. And the banking sector in this country has operated in a very imperfect economy. There is imperfect competition. People are not as knowledgeable as is assumed in perfect economies. Therefore, there is no solution other than to first fix you, like has been done now. Then you will realign yourselves and find space. And I think even the president in his assent, in his statement, he appreciated that and said, we will be watching to see how everybody behaves.
Okay.
And Parliament is still there. If there is need tomorrow to adjust something else, we will do it. But at least we'll have fixed you.
You have unfortunately represented all Kenyan banks in this discussion tonight. But as we wind up, Ishungwa, what will it take to revert this law?
To revert?
To reverse it. To reverse it.
I think it would take someone who feels nothing for this country to reverse it. One of the things I said, and I said it even to many of their bosses when I had engagements with them, that if you are sincere, if only the banking sector were sincere, the MOU element that they brought in with about 1% of the loan book, up that to about 20%, give us about 300 billion shillings to lend to SMEs, then have that regulated by the industry regulator through CBK, such that you're not just promising that we will lend 30 billion shillings to SMEs. Just by an MOU, there will be a way of reporting to the regulator, and the regulator making sure that CBK is able to make sure on a monthly basis you report to CBK who you are lending to and at what interest rate. Again, if you are to ask me at that time, now it's water under the bridge, and that's what I had proposed to many of your colleagues. If you are really sincere in what you want to offer to the Kenyan public, even the 4% spread between the CBRR rate and what the maximum capping, that could also go slightly up. You could even allow, for instance, you call me Peps, they call me a politically exposed personality, and they think I'm more risky than anybody else. I would be willing to take up even a loan at 22, 23%, but justify that and have that approved by the industry regulator. But the case as it were today is that it was so imperfect that because I am a politician and I am probably better known to judge than the Mama Mboga in my village, the Mama Mboga will go and get money to establish a greenhouse at 28%. I would get 2 million shillings at maybe 15%. Why? Because I can access your office and the Mama Mboga can't. And it's those things that we need to correct. The only way to correct them now is first to cap. Once we cap, then now you can come and we negotiate when you're underdogs. And the Kenyan public have the say and the protection.